morning. Welcome back to the Retirement Report. All right, we're talking taxes again. We got Dr. Friday with Dr. Friday's Tax and Financial Firm on with us, and we've got a caller. I'm going to go ahead and jump on that, and then we'll get back about the Secure Act and some of those changes. And hopefully I do this right because I don't do it often. Good morning, Lynn. Welcome to the Retirement Report.
Good morning.
How are you today?
Good.
How can we help this morning?
Well, can you give us the steps for making a charitable deduction from our accounts and how the steps would proceed for this year?
So when you're talking about charitable deduction, are you talking in general or are you talking about with regard to required minimum distributions?
Required minimum distribution and how it would come out of the account.
Okay, so the way that works is we have a number of clients that enjoy that tax break, and there's in particular now that the standard deduction has been raised and it makes it more difficult to itemize and get any kind of benefit from charitable contributions. This is a great exception to that. So the way it works is you would notify your custodian that you want to have all or some, any portion for that matter, of your required minimum distribution to be given to the charity of your choice. So that they typically are going to ask for the name. They may want the tax ID number, the address, and they will then make it, and you'll, of course, what amount. They'll make the check out to the charity, and in most instances, I know in my office the way it works, it's sent to you to deliver to the charity.
Right.
Okay.
So you would just need to let us
taxes,
know, or whoever your custodian is, you would just let them know how much and who and it may be more than one charity. So I know I've had clients that sometimes it's like 4 or 5 different charities that they're giving to each year, and that's fine too.
And then when you file your taxes, you're going to get a 1099-R.
That's great. Thank you.
It's going to show 100%.
You're welcome. I'm going to have Friday. I'll hang up, but we'll have Friday then take it from there. Go ahead, Friday. You were saying?
I was just saying when they get the 1099-R from their RMD or their custodial, it's going to still show 100% of what they took out. There's a place on the tax return that will show where you would put the charitable contribution, and that will completely dollar for dollar reduce your income on what you gave to the charity, and you don't have to itemize to get this deduction. This is coming right off of the 1040.
Exactly. This is one of the great benefits with this deduction is you don't have to hit any kind of floor or anything. It's 100% deduction. Well, in essence, that money that you would have been paying tax on, you're not going to pay tax on. So great way to do it. One of the things with people coming up on their tax filing right now that we run into is preparing, all those documents. Because everyone still received all their tax forms back based on the original deadline of April 15th. So that wasn't changed, right?
No.
So all the tax forms, 1099s, W-2s, all that. So hopefully they've kept track of those things with the extra time that they've had.
Exactly.
And this is one. Have you found? I know we meet with my clients, of course. So I probably got at least 50, 60 clients. In fact, I think it's. Now that I think about it, it's probably actually more like 80, 100 clients that have that you do their taxes, and we set aside typically I think 4 or 5 days each year just to meet with my clients so that I can attend those meetings. And I know we always run into where we find errors in tax reporting by the custodians.
Right, we find the 1099-Rs are either misidentified because there's a code on them. It says ordinary distribution, rollover. They're missing forms, and probably one of the larger is cost basis. Something's been sold and the basis is not reported on the 1099-B. And having you in the office just allows us to be able, and he does it very quickly with his contacts, so it makes us be able to give the client a finished tax return or at least a close assessment so that we can actually get them prepared to, if they owe money or they have a refund or whatever.
And this is one of those that we run into every year. So when you're getting your tax forms, hopefully you've got that same kind of connection with where your tax person and your financial advisor are working together with the filing of taxes. Because it's a big plus. When I'm there, we run into things. If we've done Roth conversions, if we've maybe sold some securities and there's some capital gains to be talking about, any of those kind of things, we want to make sure that it's properly communicated with your tax person. And that's why I like to be at these meetings, because we run into stuff all the time that a little clarification. So if you're not sure about those things, one of those is tracking cost basis when you sell securities. If you don't, and Friday, you know better than anyone, right? How many times does someone come in and they've gotten hit with where they sold some securities, and if they're not claiming a cost base, they're not saying I paid this much for it, this is what I sold it for, that's my gain, or maybe loss for that matter. But if they're not tracking that or reporting it to you, the IRS is going to treat it as if it's zero, right?
100%. Yes, that's correct. And also, people move money from place to place. And from a tax standpoint, all we have is the year before to find out. So if the money was moved from one company to another, I'm going to ask about one company. I'm not going to know that you moved the money. So we could very likely miss a 1099 or a conversion because we don't know to ask. And a lot of times people think, well, these are all the forms we have. This is what I have, which is great. When you're there, you are able to look at their account and say, no, that one's no longer there. No, we didn't take this. Or, yeah, we should have a 1099-R from this company, whatever, which saves the headache of getting a love letter from the Internal Revenue Service, because they know, they have the information. If my taxes don't match up, then the client gets the love letter, and it's just never a happy experience.
This is one of the areas I know I've run into with clients where I remember a few years ago, a lady that we had sold some securities, and when she filed her taxes, she wasn't using you, she was using her own another tax person. But in fact, I take that back, she filed her own taxes is what it was. So she had, I don't know, one of the tax software programs, filed her own taxes and somehow did not put in the basis, and she got, I think it was a $37,000 tax bill from the IRS that's saying she owed based on taxes on these gains. So she obviously did not sleep well that night. She came in and we went over it, and I explained, I was like, yeah, you had, your basis, her basis, when she sold this particular security, she had it for many, many years prior to me being her advisor. In fact, one of the reasons we were selling it was because it was so poor as far as performance went.
Wow. So she had a loss.
Yeah, well, exactly. So we turned that into a tax refund instead of a tax bill. But we had to, reopen, do an amended return, and, provide all the proof of what her cost basis was and that. So this is just one of those areas when you get ready to file taxes, some little red flag things you want to be aware of. Roth conversions, we do a lot of that in the office. This is a great strategy to help you minimize taxes over your lifetime, create tax-free accounts, but it creates current taxes in many instances. But this is another area. I just met with another client, what was it, yesterday actually, and we're doing a Roth conversion strategy where we're going to zero out, or at least we have the option. We can zero out the taxes, and he can convert somewhere. I think it's around $10,000 or $15,000 a year. Why not? Right?
I
pay
love
no
that.
tax
Yes.
on it.
Love that.
Yeah, and then we have some, and then it's another option. So, well, you're going to be in a 12% bracket with your required minimum distributions. What at that time will actually be a 15% bracket because of the sunset provision in the current tax law. So what we talked about instead was, why don't we
maximizing.
Start going up to use up the 10% bracket. So that gives us another $20,000 that we can convert and only pay 10% tax. So now for $2,000, we're going to be able to, for him, convert about $30,000 a year over the next 4 or 5 years until RMD age. That's going to reduce down his required minimum distributions, push him back down in a 10% bracket, set up a really good situation for him. It's also understanding, though, balancing out. Do you get many people asking about taxes on Social Security benefits?
Absolutely, and that's what I was say. Some of these financial people, I mean, they do the talk, they have the talk, but they're not taking the total picture. So when people come in and I prepare the taxes and they've done the conversion and they may have expected, let's say, $5,000 in tax and it's $8,000 because of the Social Security being taxed. When you do the conversion, right? I mean, you need to have the whole picture. You can say, well, let's convert $30,000 at 12%, but that 12% also includes me now having Social Security tax. Nothing worse than having to have a client that's done something like that and not expect the money, not expect the bill at the end of the day. And that's one of the things, Hank, you're really good at. You prepare them. So when I say the number, they're all like, yes. And you're usually like, yeah, we've already got that accounted for. We know where the money's coming from. It's an important part if you're a financial planner. And sometimes these people are doing them themselves, I think. So they just don't take the whole tax issue in play. And it's very important. Social Security it's dollar for dollar at some point where you're converting $1 and adding $1 of Social Security. So it's much more in taxes than you think.
That's a good point. This is one of the downsides when we do a show like this, when we're trying to impart information to you to help you file your taxes, but minimize taxes overall, help you with tax planning, if you will, not just tax filing. But when we're helping you with tax planning and we're sharing strategies, understanding that you want to, don't just do it yourself, if you will. Okay, the goal here is to, go talk to your financial advisor and your tax advisor, and to have that conversation. Hey, this Roth thing sounds like a good deal. Can you run some numbers for me? And if you need some help with that, you can also call my office. That number, in fact, I should throw that up there, 615-376-5325. So if you would like to get a comprehensive financial plan, which includes things like that, the strategies we share with, which is how to do a Roth conversion, whether it would be a good idea for you, how much to do, what effect it's going to have on Social Security taxes, for instance. So we balance that out. When I'm talking about someone paying zero tax or staying in a 10% bracket, we're certainly taking into consideration that the income, the money that's being converted, could impact the benefit, the taxation of the Social Security benefits. So we run those as well. Okay, we run to see what the effect would be, how much tax that would be, and if it still makes sense. We're going to have to take a break, so here it is, 615-376-5325. Give us a call if you'd like some help with these kind of things. If you'd like to come in and see me and get a comprehensive plan done, when you call the number, we've got people standing by, Tess maybe, or Dana, they'll get your information. They'll send you out a checklist of things to bring to your appointment with me. We're doing all the CDC guidelines in the office, probably beyond that. My receptionist is married to a doctor. She's very sensitive about the cleanliness of everything. Of course, we've always been that way anyway, but now even more so. So very, very safe environment for you. Distancing, if you're comfortable with the mask, you're welcome to do that as well, of course. So there it is, 615-376-5325. We can also do them by the phone if you'd like to, if you want to get this kind of planning or some help and you just want to call in and talk a little bit about it, you're welcome to do that as well. So there it is again, 615-376-5325. And when you come in to see me, or if we do it over the phone, I will make sure to get you a free copy of my book, 7 Steps to Financial Freedom in Retirement. Freedom, we want it. All right, we're going to take a break. Join us here. We'll be right back on the Retirement Report.